number of stocks which are declining, and one of them which is running hard is MAS Financial Services. The first management on the show today, the stock surging in trade on the back of a strong set of numbers. One should say yet again, because disbursements came in strong at around 2,900 crore rupees. Kamlesh Gandhi, who's the chairman and managing director of the company, joins in now. Thanks a lot, Mr. Gandhi, for joining in. Quarter after quarter, we've been speaking to you, and you have said that, you're positioned for 25-30% sort of growth. 10,000 crore AUM is something that you will do in FY24 itself. You've gone ahead and done it. I presume that you are looking at 20+% growth for FY25 itself. But I won't steal words out of your mouth. If you could give us a sense of the near-term guidance that you have with regards to AUM growth, with regards to asset quality, and with regards to NIMs.
So thank you so much. Nice to reconnect. So as you very rightly observed, that once again a very consistent quarter. This has been our 116th quarter of consistent performance. So this is in lines with our fundamental belief that consistency and steadiness take you to your destination fast than any other thing. So coming back to the performance on the year, it was a very satisfying year, so to say, with a rating upgrade to AA- from A+, very deservingly so, and crossing a 10,000 crore mark, and also one more milestone of crossing a consolidated profitability of 250 crores plus, while maintaining the asset quality and the capital adequacy at very high level. Capital adequacy stood at 24% as I talked to you. Coming back to your question on 24-25, once again, the same fundamental will grow consistently but solidly, anywhere between 20 to 25%. That has been our belief. That is a lending institute to grow at 20 to 25%, which doubles your AUM every 3 to 4 years, is the right way to grow in a fundamentally strong manner. So once again, confident of posting another 20 to 25% growth this year.
Okay, all right. Confident of posting a 20 to 25% growth. Mr. Gandhi, welcome to the show and congratulations on what has been another healthy quarter for you. Just wanted to, dwell a little bit on the asset quality, because that has seen a marginal worsening which has taken place in the quarter. Gross NPA 2.25 versus 2.23% Q on Q. Gross NPA absolute levels is up around 9%. Was there any kind of stress that you all faced, say from the rural market as well?
No, the borrowers whom we serve, mainly into the informal class, we've always been sharing that the NPA will be range bound. So our guidance is that our gross NPA will remain anywhere between 2 to 2.5%. The net NPA will be anywhere between 1.5 to 2%. Very difficult to give a decimal to decimal point prediction. But if I share our experience with the borrowers, we are quite confident about their repaying capabilities and the quality of the assets going forward. So all in all, the asset quality is well under control. A few basis points here or there is the nature of the borrowers whom we serve.
Gross NPA between 2-2.5%, net NPA between 1-1.5%. I presume you will maintain your NIM guidance of 6 to 7% as well.
Yeah. So gross NPA between 2 to 2.5, net NPA between 1.5 to 2, and NIMs of around 6 to 7%.
Right. I just wanted your thoughts on, this scale of performance that you've been doing over 110 quarters, like you've pointed out. This consistency, while it is remarkable, one also wonders at some point maybe there could be some risks that one would foresee, right? So from your standpoint, what are the risks that you see to this growth, that the growth path that you're on? And at some point, would you, when you see those risks, maybe look at lowering your growth to maintain, your business metrics?
Yes. So I think we are a great believer that the growth is also to be discovered rather than always determined. And if you take, if I give you one example, during COVID, we were the ones who grew our balance sheet by around 12%, only because we were not confident of lending during that time. So while we are very confident of the fundamentals, the market size and our distribution strength of growing at 20 to 25%, we also take into account in prioritizing profitability, quality of the assets we create and growth. It is not growth at any cost, because I personally believe that markets are there to stay, very important for us to be there. And that is what we demonstrated during COVID also. During COVID, as I shared, we degrew, but later on we got the opportunity to recoup, and we are back on track on a 20 to 25% growth.
Okay. Well, just before we, I ask you about your AUM breakup and what you're guiding in terms of sectors, I just wanted the cost of funds for you from this for this quarter, and what is your probable range or guidance for the coming quarters?
I think if you see as compared to Q3, we have marginally improved on our cost of fund despite there were rise in MCLR. And with upgrade in rating, we are very optimistic that the cost of fund will hold on or reduce within next 2 to 3 quarters going ahead. Currently, we are at around 9.82% in our cost of funds, which is historically higher by at least 0.75% over all these years what we have been borrowing at because of the recent hike in the repo rates and then the transmission thereof. But we are confident that we'll be in a position to hold on to this rate, and then gradually within the next 2 to 3 quarters, we'll see reduction in our cost of borrowing also.
Okay. Now coming to the two segments, micro enterprise as well as two-wheelers. If I look at it on a Q-on-Q basis, it's flat when it comes to your assets under management. Is there some caution there?
No, that is, as I told you, that is the nature of the market on quarter-to-quarter basis. Depending upon the opportunity we get in the market, Q3 is usually a festival season, whereas Q4 is slightly muted as compared to Q3 in these two segments.
So if I look at, the AUM of your commercial vehicles, which have grown 100% year on year, your salaried loans, which have also increased about 90% year on year, along with two-wheelers. So these three functions, so the wheels portfolio is close to around 13.5% of your AUM, and salaried is roughly about 5.5%, 6% of your AUM. What kind of growth do you see in these three areas over the next couple of years? How much do they become as a part of your AUM going forward?
See, as you know that we have been predominantly a MSME-driven company. Last year, our total contribution from MSME was 87%. Which is close to 81% right now. And going forward, we would like to be a well-diversified asset-based company. And within next 3 to 5 years, we see the contribution from wheels anywhere between 20 to 25%, from salaried personal loan anywhere between 5 to 7% or less than 10%, and the rest coming from our MSME portfolio.
And what's your branch opening outlook for the next 1 year? You had a target of 225 by the end of FY24. As well as fintech tie-ups and direct distribution. If you could give us numbers on that.
So on a consolidated basis, we already reached there on our branch distribution. We are at 189 on our parent and around 65 branches in our subsidiary. So we are already there at around 225 plus branches. And I think in this year, we will be on a consolidated basis adding anywhere between 30 to 35 branches this year.
Okay. All right, Mr. Gandhi, we're going to leave it on that note. Again, congratulations on what has been a good quarter. The stock is reflecting it. The stock is up around 6% at this point in time. Thanks very much for joining in and speaking with us. Well, we need to take a short break, but on the other side,